Hey, thanks for tuning in. This is Singh with KEES Lending Inc., and this is the sunny side of finance. There's a million bajillion different podcasts out there, so I really appreciate that you guys tuned into this one. If you like what you're hearing or if you like what you're seeing, please make sure to hit that follow, subscribe button down below. Today, we're going to be talking about the bank statement programs. This has been becoming a program, or this has become a program that is industry staple. If you haven't heard of the bank statement program, let me explain it to you. Essentially, lender will take 12 months, 24 months, in some cases 3 to 6 months even, of your recent business or personal bank statements. They'll add up the deposits within those statements, and then they'll use a formula to calculate your debt to income ratio based on the deposits within your bank account, versus actually looking at 2 years history of your tax returns, personal and business, going through the actual traditional methods of income calculation. Again, this has become very, very popular amongst the self-employed borrowers because let's talk about that. Most self-employed borrowers are deducting as much as they can. They're maximizing their tax benefits, tax deductions, tax credits that are out there. A lot of these tax credits or tax deductions are even going away. Again, like for example, a very big common one is the heavy vehicle, the 6,000-pound vehicle deduction. Just a year ago, that tax benefit would have allowed you to be able to deduct 100% of the vehicle, the price of the vehicle, whether it was leased or bought. Now they're tapering it down to so on and so on until it's actually phased out. So again, there's a lot of tax loopholes out there. There's a lot of tax strategists out there now that you're seeing that are actually becoming influencers as well. And one tax influencer that I really like to watch is Carlton Dennis. Really great information. He's got some great courses. And so I'll drop their links down below so you can check them out. But in a world where becoming more and more knowledgeable on tax benefits, tax advantages, we're starting to see the self-employed borrower, especially in an inflationary market, hold on to as much of their hard-earned, taxed dollars as they can, and by way of deducting as much as they can. But what ends up happening is by the time they get to purchasing their dream home, this can, actually fire back on them. This can actually cause them to be able to be put in a situation where for a traditional mortgage like conventional, FHA, VA, or jumbo, they're struggling to qualify because, again, traditional calculation of income, those methods look like this: 2 years tax returns, 2 years W-2s, 2 recent pay stubs, checking to see if there's declining income, things of that nature. And this is really what becomes a challenge for those that aren't sophisticated when they're doing their tax planning. So historically, we have seen home buyers that are self-employed, put together a strategy with their CPA or tax attorney or enrolled agent, the year prior to buying a home, or maybe a couple years prior to buying a home. And they're now not taking as much deductions. They're not writing off as many expenses, so they can still show enough income to be able to support the debt to income ratios to be able to buy a home. That actually hurts them because now they're taking less of a deduction that they rightfully have to take in order to get into debt so that they can buy a home and hope that the home appreciates. So the bank statement program kind of solves that. These non-QM programs actually do a good job of solving that, in the sense that now that self-employed consumer can still take the deductions that rightfully so exist for them, and still be able to use their deposits to be calculated for their income calculation in order to be able to buy a home. There is many banks now, but there's a handful of banks that we use that are just, top of the food chain when it comes to these bank statement programs. If you want a list of the banks that we use, or if you want a link to be able to download a free copy of the Excel spreadsheet on it so that you can calculate your own bank statements, the deposits for the last 12 months, the formula that the banks use to actually qualify you, just click the link below or message us, and we'll make sure to send that off to you so that you can do your own calculation to see where you qualify. You know what? If you have any questions on the bank statement program, I'd love to go into detail with you even more. Please reach out to KEES Lending, or just leave a comment down below, and one of our staff members will get back to you. Thanks so much for taking the time to listen to us. Appreciate you. Again, if you liked what you heard, hit that subscribe and follow button.